people might ask, well, wait a minute, why are you buying gold mining stocks if it's such a crappy business, which I said our first thing. And that's because it's a very cyclical business.
Right.
And since gold was freed up, released from price controls by the US government in 1971, there have been 5 or 6 major gold mining bull markets where gold runs up and then it collapses. Gold runs up, it collapses. Gold runs up, it collapses. So just owning gold since 1971 has been a pretty good deal. $35 to $2,000, that's okay. That's better than money in a bank account, frankly. But the gold mining stocks are much, much more volatile than gold itself. And the reason I own gold mining stocks right now is because even with gold at $2,000 per ounce, or less than that, 1,900 to 2,000 bounces around, I think the next bubble is going to be in gold stocks. We've had a bubble in real estate that blew up. We've had a bubble in internet stocks that blew up. We've had a bubble in pot stocks that, it was wild and crazy, and then they all went back to their basic value, which is most of them is zero. Yep. We've had a bubble recently in cryptocurrencies. The
ICOs.
Yeah, exactly. Especially all kinds of shit coins, not other than Bitcoin. Okay, so, and there's a current bubble, a hyper bubble in the bond market, because when interest rates are close to zero, bonds are as high as they can get. Interest rates will go back to the levels they were in the early 80s, 10, 12, 15%, 20%. Bonds will collapse. So there's a current bond bubble. There's a current stock market bubble, things like all the tech stocks in particular. So, okay, so with the government creating trillions and trillions of new dollars, which they're doing right now as we speak, where do you want to put your money to capitalize on this as opposed to get washed away? Where's the next bubble going to be? And I'm betting the next bubble is going to be in gold. Now, we've talked about gold in the past, and I guess we covered some of that. People can go to a past conversation we had. But if you want leverage, you go to gold mining stocks. Because let's look at it this way. Supposing that it costs $1,000 an ounce today to mine an ounce of gold. If gold goes to $1,001, the company's making $1 an ounce, not much. Price goes to $1,002 an ounce, their profits actually double. But if you own gold, it goes up, what, 0.1%. So that's the kind of leverage we're talking about. It's tremendous leverage. The cost of mining gold, and we have to define cost too. All these are words that are thrown around that most people don't even know what they mean. I mean, the most basic type of cost is what does it cost to take the next ounce of gold out of the ground, to actually pay the miners and haul it up out of the mine and then refine it. This is what you call basic cash cost. Most simple thing, but there's other costs to running a mining company. You got legal costs, and you got royalty costs probably, and you got taxes, and you got reclamation costs for when you close the mine down, all kinds of costs. So cash cost is the most basic kind of cost, and something called all-in sustaining costs, which is actually a newly developed term in the business, is the comprehensive cost, the real cost, including the cost of replacing the reserve. Because when a gold mining company mines an ounce of gold, I mean, that's an ounce that's gone, and they only got so many ounces in that deposit. They're all gone, the company's out of a business. So if you're gonna run a business, you've got to replace those ounces by more exploring and more drilling in that. Okay, so that's what all-in sustaining costs is. And the average, here's the key, here's the takeaway. If nobody remembers anything else, remember this. Right now, in the gold mining industry, the average all-in sustaining cost of producing gold mines is about $1,000 an ounce. Nice round number.